Welcome back, my friends. Today, we're diving into a topic that honestly left me stunned when I first came across it. There are moments in crypto when certain data points force you to pause, look twice, and ask yourself, am I really seeing this correctly? Well, this is one of those moments. Kaspa, the project that many in the community see as a quiet giant, is showing metrics that could reshape how people think about scarcity, long-term conviction, and technical growth in proof-of-work cryptocurrencies. If you've ever wondered what separates noise from real signals in crypto, stick with me, because this breakdown will walk you through numbers, sentiment, and technical milestones that paint an entirely different picture from the day-to-day price chatter. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Let's start with something jaw-dropping. According to Kaspa Daily, around 5% of the total Kaspa supply hasn't moved in over 3 years. Yes, you heard that right. 5% of the supply is locked away like buried treasure, untouched and unshaken by the roller coaster swings of the market. Think about what that really means. These holders are not flippers chasing the next pump. They're not panic selling on dips. These are diamond-handed believers who have watched the market rise and fall and yet decided to do nothing but hold. That's a massive show of conviction, and every time that number grows, it essentially reduces the liquid supply actively circulating in the market. So here's a question for you. When you see this level of discipline among long-term holders, does it give you confidence that something bigger is brewing, or do you think it's just stubbornness disguised as conviction? But things don't stop there. Another piece of analysis, this time from Nurcon Cash Club, paints an even more dramatic picture. Kaspa's stock-to-flow ratio is projected to make history by 2030. And by 2050, the projection suggests that Kaspa could hold the highest stock-to-flow ratio of any asset in human history, with numbers exceeding $500 million. To put that into perspective, that level of scarcity would dwarf gold, silver, and even Bitcoin. Now, I know some of you are thinking, this sounds way too good to be true. And honestly, skepticism here is fair. But when you dive into the emission model and the way Kaspa mining operates, the math isn't fantasy. It actually lines up. This raises a critical debate. Can scarcity alone drive value, or do utility and adoption have to carry equal weight? Here's another sign worth paying attention to. Kaspa Daily reported that 4 out of the 5 largest token outflows in the last 24 hours came from exchanges. What does this usually mean? Well, people aren't parking their assets on exchanges to sell them. They're moving them into cold storage wallets, signaling accumulation for the long haul. It's a pattern often associated with institutional investors, or what many in crypto call smart money. While retail traders get caught up chasing green candles and panic selling red ones, the quieter moves often tell the real story. And right now, the whisper is clear. Accumulation is happening behind the scenes. And here's what makes it even more fascinating. Despite all the wild swings in the broader crypto market, Kaspa continues to hold its ground in terms of sentiment. In fact, it currently ranks second in bullish market conviction. That's not a small feat when the rest of the market is looking shaky. Prices may be volatile, but the community's belief in Kaspa remains solid. Now, let's jump into a debate that's been stirring some strong opinions. Traders like Scape have argued that Kaspa's design makes it more scalable for global adoption compared to Bitcoin. Their point is that Bitcoin has had to rely on centralized Layer 2 solutions like the Lightning Network to handle scaling issues. And even then, Lightning transactions don't pay fees to miners, creating long-term concerns about miner incentives. Critics of Bitcoin's model even go so far as to call its emission schedule a ticking time bomb. In contrast, they argue that Kaspa was built to onboard the world, while Bitcoin, in their words, wasn't built to survive the test of time. Now that's a bold claim. And while I respect the technical breakdown, calling Bitcoin obsolete might be a little premature. What do you think? Is it fair to compare Kaspa to Bitcoin on these terms? Or is this just Kaspa maximalism turning up the volume? Let's talk numbers for a moment. In September, Kaspa's price opened near 8 cents, briefly touched 9 cents, and then slid back towards 78 cents. For many, that kind of dip looks like weakness. But for seasoned traders, moments like these often signal opportunity. Back in mid-August, Kaspa spiked to 10 cents, but hasn't broken past that since. And importantly, it has never touched the $1 level. Not yet, anyway. CryptoGrad, an analyst following Kaspa closely, suggests that the longer Kaspa's price remains under $1, the more attractive it becomes for accumulation. Why? Because of its extreme scarcity. And here's the kicker. Over 93% of the total Kaspa supply has already been mined. That means very little new supply is left to come onto the market, reducing sell pressure dramatically. Scarcity, combined with demand, often acts as rocket fuel in crypto markets. Do you believe scarcity alone is enough to drive explosive value, or do you think factors like adoption and utility carry more weight? Now let's shift from scarcity to utility, because Kaspa is about to cross a huge milestone. This month marks the rollout of smart contract capabilities on Kaspa's network. And if you've followed crypto long enough, you know what that means. Decentralized applications, DeFi projects, and token launches could all start building here. Smart contracts don't just enhance technical credibility, they bring in developers, creators, and new users. Networks that support decentralized applications tend to achieve much broader recognition. For Kaspa, this could be the missing piece that pushes it into the spotlight after months of consolidation. So here's a question. How important do you think smart contracts are for a proof-of-work blockchain in today's landscape? From a technical perspective, Kaspa stands out in ways that most proof-of-work projects can't match. It combines the tried-and-true security of proof-of-work with extremely fast block times. This balance between decentralization, security, and usability is rare in today's market. According to analysts like CryptoGrad, these technical strengths give Kaspa a long-term edge. Speed and security aren't just flashy features. They're the kind of fundamentals that support sustainable adoption. Looking ahead, some analysts see potential milestones like $2, $5, or even $8 per token in the long run, provided the network's scarcity and smart contract ecosystem gain traction. To be clear, these aren't short-term predictions. They're long-term scenarios tied to adoption cycles. For now, sitting under 8 cents, Kaspa still looks massively undervalued compared to its potential. Here's another fascinating angle. Axel from Kaspa Revolution compared Bitcoin's emission model with Kaspa's, and the charts reveal something intriguing. Historically, Bitcoin's price has often traded below its emission curve on a logarithmic scale before breaking out to new highs. This happens because of declining issuance, rising mining costs, and natural demand cycles. Kaspa follows a similar logic, but with one key difference. Its emission curve is much smoother. This smoother model suggests that Kaspa could avoid some of the extreme drawdowns that Bitcoin has faced. In other words, dips in Kaspa's price may not be weakness at all, but instead normal accumulation phases before the next leg upward. The stability of its emission model could make Kaspa less volatile than Bitcoin while still delivering strong long-term growth. So, would you rather ride the wild swings of Bitcoin or prefer the steadier, smoother path that Kaspa seems to offer? When you put all of this together, Kaspa's story is built on 3 major pillars. First, genuine scarcity, over 93% mined with very little left to hit the market. Second, growing utility with the arrival of smart contracts. Third, strong technical foundations thanks to proof-of-work security and rapid transaction speeds. This combination is rare, and it's what has many analysts calling today's sub-$1 period less of a setback and more of an accumulation window. But let's be clear, crypto is still unpredictable. Regulatory hurdles, macroeconomic pressures, and shifts in sentiment can shake even the strongest projects. Still, when you see long-term holders growing, exchange balances dropping, and community conviction holding strong, those are usually signs of smart money preparing for something bigger. So where does that leave us? Kaspa is quietly building a case for itself as one of the most compelling opportunities in the proof-of-work space. With scarcity locked in, utility expanding through smart contracts, and technical design that blends speed with security, it checks boxes that very few projects manage to check all at once. For patient investors, this may represent a rare window before mainstream recognition kicks in. But let's not forget, timing in crypto is always uncertain and there are no guarantees. What matters is whether you see the bigger picture. Are you focused on today's dips, or are you looking at the structural story unfolding beneath the surface? Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.